Have you been thinking about investing and are wondering if you should hire a financial advisor? Well, what if I told you that you should hold off and learn these 5 things prior to hiring a financial advisor? Aloha everyone, it's Rick here with goodincomestreams.com and the author of Invest Like the Rich. And on this video, we will be talking about, should you hire a financial advisor? Now, there are 5 things, like I mentioned, that you should know before you should hire a financial advisor. And the first one is finding a fiduciary financial advisor. So what does finding a fiduciary financial advisor mean? Tongue twister, yeah? All these F's. Well, financial advisors are supposed to work in your best interest. However, there are some out there that don't, and they are not considered fiduciary. So what is the meaning of fiduciary? Well, according to Investopedia, a fiduciary is a person or an organization that acts on behalf of another person or persons, putting their client's interest ahead of their own. With a duty to preserve good faith and trust, being a fiduciary thus requires being bound both legally and ethically to act in others' best interest. Wow, in your best interest. In other words, that financial advisor is going to give recommendations or invest your money in things that will make you money, or at least put your needs first and not theirs. Now, what do I mean by that? See, there are financial advisors out there that push certain investments that creates huge commissions for them. Now, sometimes these investments do make you money. However, there are times when these investments also make you lose your money. But what they do is they just say, well, there are risks with investing, which is true. However, if they were to put their money in that investment, would they have done that? That's a big question, right? The only reason why they pushed that investment was because they knew that they were going to get huge commissions. Now, if that investment did not have any commissions, would they have offered that recommendation to you or invest your money into that investment? The short answer would be most likely not. The only reason they're pushing for those ones is because there's a commission. So that means they're double dipping. So on top of them charging you for managing your assets or managing your money, they're also getting a commission on the other side, which means that's conflict of interest. So that means they're not fiduciary. Also, I want to ask you, do you currently have a financial advisor? If so, are they making you a lot of money? If it is, then congratulations, you're on your way to becoming financially independent. However, if that's not the case, then you should ask that financial advisor, are you making commissions on all these investments that you keep pushing towards me? If so, maybe it's time for you to look for another financial advisor. Or you can watch the rest of this video and find out the 5 things that you need to know about having a financial advisor. Now, the second one I want to talk about is hiring a friend or a family that is a financial advisor. Now, I know sometimes you might think that that family or that friend will have your best interest because you know them for a while. However, relationships can be strained when you hire somebody that you are close to. The difference between hiring someone from the outside and hiring a family or friend is that you know them very well and you don't really have to do that much interviewing. However, trying to keep your money, family, and friends separate is always a great idea, because sometimes people tend to fight when it comes to money. Now, I can understand if that family or friend is a great financial advisor and they can make you a lot of money, well then everything is peachy, right? Everything's great. However, as soon as something goes wrong and you start losing money, guess what? There's going to be conflict. There's going to be words said, and that relationship will probably be ruined forever. So I always try to practice keeping my money and my family and friends separate. So that way I can always preserve both. You can preserve your money and you can preserve your relationship with your family or friends. Now, if you're enjoying this video, I'd like to ask you if you could smash that like button. Also, don't forget to subscribe and hit that notification bell so that YouTube will notify you the next time I upload another video. Now, moving on to the third one. So the third one is hiring the right financial advisor. Now, we must remember that we don't want to just hire any financial advisor out there, especially those that are rookies or are very inexperienced. You want to hire somebody that has great experience and a solid performance. So one way to find out is, do they have any type of experience? And you want to see what kind of portfolios they carry. See, some of these financial advisors will try and blind you with their affiliation with these large companies. For example, Goldman Sachs, Morgan Stanley, and others out there. And another reason why you want to make sure that you find the right financial advisor is that some financial advisors are very aggressive. Now, see, this can work out for younger people who have 30 to 40 years to make up for any losses. But if you're much older or you're planning on retiring soon, this might not work out for you. Now, the same can be said of the opposite. If you hire a very conservative financial advisor and you don't plan on retiring anytime soon, the growth in your investments can be very slow. So finding the right balance, finding the right financial advisor that can meet your needs is also very important. Now, if you have any questions, please don't hesitate to leave a comment down below and I'll be more than happy to answer those questions. Now, moving on to the fourth one. How does a financial advisor get paid? Or how do these financial advisors get paid? Now, we all know that financial advisors have to get paid somehow, but we don't know exactly how do they make their money. Now, I mean, we might have an inkling that we're going to have to dig some money out of our pockets to pay them somehow, but there are actually three ways that they get paid. I mean, there's maybe other ways, but these are the three major ones that they get paid. Now, the first one is base fee or a flat fee. So whether your investments make money or lose money, you pay the same. Now, this will work out if your investments are making money and they're growing, because no matter what, you pay them that flat fee. However, the opposite can be said if you're losing money, because then the more money you lose, you're still paying the same amount, meaning your investment just gets smaller and smaller. And that can be a disadvantage. Now, the second one, on the other hand, is something that I prefer, which is the percentage. Now, the percentage one can work out both ways, right? Because it gives the financial advisor a little bit more of an incentive to make you money, because the more money you make or the bigger your investment grows, the larger their commission is, the larger they get paid. Whereas if you keep losing money, then the money that they get is a lot less. So it's a little bit of an incentive for them. I mean, yes, it will cost you more, but then again, you're making money, so it shouldn't matter, right? Now, the third one is commissions. Now, this one I do not care for, because now that financial advisor is not really working in your behalf, so not serving your best interest, because they're getting paid from whatever investment that they're pushing towards you. So let's just say, for example, they tell you to buy a mutual fund, or they use your money to buy a mutual fund because you gave them authority to invest in your behalf. Now, the mutual fund will give them a hefty commission for introducing that mutual fund to you. Now, whether that investment makes you money is a good question, but at the same time, I do not like the way that works, because they're double dipping, right? While they're charging you, they're also making money off the commissions. So if you get somebody that keeps pushing certain investments and you find out that they're making commissions out of that investment, then maybe it's time for you to find another financial advisor. But before you continue to do that, just wait till I give you the fifth reason, okay? Now, before I continue, I'd like to ask if you could smash that like button if you're enjoying this video. Also, don't forget to subscribe and hit that notification bell so that YouTube will notify you the next time I upload another video. Now, the fifth one you need to know is, can your financial advisor make you a lot of money? A good question, right? Well, let me give you the short answer, and the answer would be maybe. Wait, not the answer you're looking for? Well, let me explain why. See, financial advisors will always take money off your investment, right? Because they got to get paid no matter what. Whether you make money or lose money, they're getting paid. So while you're making money or losing money, they're getting paid, so it has to come off somewhere. Now, let's just say you have that large pool of money that you're using to invest. Well, guess what? That investing power just reduced every single month, meaning it's affecting your return. Even if you got a huge return, they take their cut, your return just became smaller. And if you experience a loss and they take that cut, then your return or your loss just got even bigger, because they got to keep taking their payments. Now, sure, I understand they must get paid, right? But at the same time is, why? They just lost you money. I mean, if you made money, then that's great, right? Now, let me give you a fun fact. Did you know that most financial advisors are unable to beat the market? And even if they do, they're unable to duplicate that same performance the following year and the year after that. So that means that even if they made you a lot of money this year, the chances of them making you more money next year is very slim. Also, financial advisors' picks are usually outpaced by the S&P 500 90% of the time. So if you hire a financial advisor and they can't even beat the S&P 500, why would you even hire them? With all that being said, it makes you wonder, why even hire a financial advisor to manage your money or your investments? Now, if that's what you're thinking, then maybe it's time to educate yourself.
I can understand that for some people this can be very overwhelming, especially if they're not used to investing. But at the same time, we must remember that we are all responsible for our own finances. And if we keep passing on these responsibilities to someone else because we don't want to be in charge, or we don't want to have the headaches of trying to choose or trying to do our own investing and handle our finances. And just because you hire someone to invest for you does not mean that you are off the hook. Because if you really think about it, you're asking someone else to make that decision for you so that you don't have to worry about it. And just because they make that decision, they're going to try and do their best. But at the same time, there's still a lot of risk. Investing requires risk. So learning how to invest can actually help you, right? Because then you can mitigate the risk. Because no matter what, there is no investment out there that's 100% risk free. But if you do know of one, please let me know, because I would like to invest in that. So let me know in the comments below if you know of an investment out there that's 100% risk free. A lot of these financial advisors like to invest your money into paper assets like stocks, bonds, mutual funds, and others out there. But you can also make a lot of money if you invest in hard assets like real estate. Now, I know that you must have seen on TV like flipping houses and stuff like that. While those things can make you a lot of money, those also have a lot of risk. So if I'm telling you real estate and there's a lot of risk, why even mention it? Well, see, I like to invest in real estate, and I don't like to buy it at full price. So what do I mean? So I look for properties that might need a little work. Maybe not a lot of work, not a ton of work, because I don't want that. I like something that needs some work, and I try to get them at a very deep discount. And what I mean when I say a very deep discount, I'm talking about getting them at 50% of its actual value. Now, this one, of course, requires a lot of negotiations unless you go into auction sites and stuff like that. But I mean, there's so many ways to make money with real estate. The thing is that you own a hard asset, and a hard asset is really hard to get rid of. I mean, unless you burn that house to the ground, but you still have the land. Now, I understand that real estate, you can make a lot of money. I mean, a lot of millionaires have been made with real estate. Then you can also borrow from that property. So imagine you own this piece of land or this piece of property with a house on it, everything, and you go to the bank and you borrow so much, and then you take that money and you buy another property. Now remember, if you're going to borrow money from those properties, make sure that there's a way for it to get paid back. So one way to do that is to rent it out. So that's another source of income right there. You can get rental income and you can pay down your mortgage. So you just borrowed money, you own several properties, you rent it out, you have this extra income that's coming in, and then on top of that, you can also depreciate the property, where you can pay little to no taxes. Of course, please consult your accountant with that, because I'm not an accountant and I do not give financial advice. But I do know that with my accountant, she helps me pay very little taxes because of my depreciation on my properties. So that's another way that you can make money. And there's so many different other ways to make money, but it's more endless than investing in paper assets, where it's very simple. You just buy and then you sell. Whereas to real estate, you can make a lot of money in a very short time, depending on how aggressive you are and how much risk you're willing to take. But a lot of people have made millions with investing in real estate. Now, here's something that I want to talk about. Here's a quote from Andrew Carnegie, and it goes, 90% of all millionaires become so through owning real estate. More money has been made in real estate than in all industrial investments combined. The wise young man or wage earner of today invests his money in real estate. Andrew Carnegie. So if you follow what Andrew Carnegie said, and there are more millionaires made in real estate, or if we just base it off how there's a lot of millionaires and billionaires out there that invest their money into real estate, then why not try it out for yourself? I mean, I know that this might not be for everybody, but at the same time, I can say for myself that real estate has been really good to me. Of course, I'm not nowhere where I want to be, but at the same time, I can say that with real estate, I have tripled, almost quadrupled my net worth in the last 15 to 20 years. So if that's something that you want to do, maybe you might want to think about investing in real estate instead of hiring a financial advisor. Now, of course, that's up to you. Remember now, this is not financial advice. At the same time, I just want to share my experiences. If you enjoy videos like this, you can also check out my video up here or my video down here. Now, I'd like to say mahalo for watching this video, and remember to always strive for financial independence. And until the next time, aloha!